world's economy has had its ups and downs throughout the year, and now that 2014 is coming to an end, what can we take from the data out there? Joining us is Urs Beck, Portfolio Manager at New Capital. Welcome.
Good morning, Alex.
Good morning. So Urs, tell me, why do you stick to your cyclical exposure with over 0.25% of the fund in industrials and 17% in consumer cyclicals when the macro data in Europa is turning worse?
Well, I think we've seen a little bit shakier figures for sentiment indicators, but the real world hasn't really changed a lot. I talk a lot to companies, to CEOs, and they don't see anything in their orders today. Another point is the Swiss companies are all very international, so while Europe may get a little bit shakier, it's going to be very stable in the US. Asia looks not bad, and a lot of my cyclical exposure comes from car delivery, supply chain into the car industry, and this looks very stable. We just had the Daimler-Benz figures the other day. Even Germany is growing 5% in October. So I feel very comfortable to take the growth in Europe with my portfolio.
That's pretty good then. Novartis has an impressive run with 28% year to date plus dividend. Yet you still prefer Roche. Why is that?
Well, honestly, I miss Novartis. They surprised a lot with their fantastic clinical data on LCZ 696. They issued not a good news just this morning. So they have a good run in the short term. And in a global portfolio, it's a fantastic company. I just prefer Roche because it's next to my number 2, Novartis. Roche is just the number 1. I think they make the easier investment case. They're more focused. They're even more R&D driven. And I have a very strong impression for their management team. The valuation is very close to it, so I have a preference for Roche. And in the long run, I think they're just set up even a notch better than Novartis is.
And finally, as the year comes to an end, what has been the biggest positive surprise and the biggest disappointment?
Well, it's a shame you asked me about the disappointments, but obviously they are disappointments every now and then. And the stock which disappointed me most in my portfolio, one of my biggest holdings, is Implenia. They're the number 1 player in construction in Switzerland. They issued a profit warning during the summer because they had to write down a couple of projects. I still stick to this case. I think it's one of the most attractive valued stocks we have in Switzerland. It's very cheap multiples. It's a very good value generator. They have a fantastic return on invested capital. They're well run. They stick to their midterm targets as well. They're the number 1 in Switzerland. They have a good basis in Norway. These are countries which are very rich, so that there's going to be a good deal flow coming up. So I stick to this one, even if it was a big disappointment so far this year. On the positive side, Myriad is sticking out. It's a small tech company. They're building up a messenger service. They're pretty much close to being the number 1 in Latin America. They got more than 100 million users already on the platform. It's a very impressive number, and the valuation of the company is around 400 million. So if you think about what we've seen on the deal basis, like WhatsApp going to Facebook, which is a comparable product to what Myriad is offering, it's a stock with a lot of upside left, and it tripled already this year. So that's the one sticking out on the positive side, and I stick to it into 2015.
Well, obviously Latin America is the place to look then.
It's definitely a growth area, and while on other markets you have a big player, like in Europe we're all used to use WhatsApp, and there's not a clear leadership yet in Latin America, but there's one with the biggest momentum by far, and that's Myriad's Messenger.
Fantastic. I'll make sure to look for that for 2015. Thank you very much for your time today.
Thank you, Alex.
That's all we have time for today, but make sure you keep checking back with Dukascopy TV.